What are trading strategies? There are hundreds of different trading strategies used today all over the world. In this video, we will help you understand the basics of financial market analysis. Trading strategies are based on signals that help to make trades. These signals depend on the method you choose for market analysis. There are four basic methods of technical analysis: candlestick analysis, working with power levels, computer analysis, and news trading. In candlestick analysis, the main focus is on candlestick combinations or patterns. A combination usually signals a trend reversal or its continuation. Power levels are specific spots on the chart where the price may stop moving and reverse. For example, levels of support and resistance that mark historical and local extremes, trend and channel lines on the chart. There are two types of trading strategies using power levels: breakout and rebound. Computer analysis is based on generating signals about the advisability of buying or selling certain trading assets. In other words, trend indicators. With them, you can quickly analyze the situation and make timely decisions to open a trade in the right direction. The market reacts to significant news. Depending on the significance of the news, the price of the traded asset can change after its publication. The news trading strategy is considered quite risky, but it allows you to make a significant profit in just a couple of minutes. Any trading strategy you choose requires more detailed study and developing practical skills on a demo account. How to use the moving average strategy. Today, we're going to show you how to use the moving average trading strategy for quick trades starting at 5 seconds. The simple moving average, or SMA, is an indicator that helps us see the overall direction of the market by ignoring random fluctuations. Using two SMA lines with different time frames, we can get signals to open a down or an up trade. The first indicator is fast, reflecting price changes over a short period of time, while the second one is slow, showing the overall trend. Go to the Indicators section, select the Moving Average indicator to enable multiple SMA lines on your chart. Click on the editing icon next to the indicator name in the top left corner of the screen to adjust the SMA indicator settings. Set the time frame in the window that appears. For quick trades, the first SMA line can be set with a time frame of 3 seconds. It'll be the fast line. The other SMA line can be set for 5 seconds. It'll be the slow line. Choose color and thickness. Click on the Save button. When the fast SMA crosses the slow SMA from bottom to top, it signals to open an up trade. When the fast SMA crosses the slow SMA from top to bottom, it signals to open a down trade. Let's take an example. The fast SMA crossed the slow one from bottom to top here. We can also see a sharp spike in price. This was a perfect moment to open an up trade. In this case, the fast SMA crossed the slow SMA from top to bottom, and the price went down. It's a great moment to open a down trade. Experiment with different time frames and number of SMAs depending on the volatility of the asset and the expiry time of the trade.
How to use the RSI strategy. Today, we'll show you how to use the Relative Strength Index strategy for quick trades starting at 5 seconds. The RSI, or Relative Strength Index, is a momentum indicator that helps you determine how much and how fast the price of an asset is changing. It ranges from 0 to 100 and is ideal for identifying entry and exit points in short-term trades. How to set up the RSI for short-term trades? Go to Indicators and select RSI. For short-term trades, consider reducing the standard period from 14 to 510 to make the indicator more sensitive to market movements. Watch for RSI values above 70, overbought, and below 30, oversold. These moments can offer good points to open trades. For example, if the indicator exceeds 70 from bottom to top, it's a signal to open an up trade. And if the indicator shows a value below 30 from top to bottom, it's a signal to open a down trade. Combine the RSI with chart analysis to refine signals. RSI can significantly improve your ability to make quick decisions based on market momentum data. Experiment with settings and find what works best for you.
How to use the MACD strategy. Today, we'll show you how to use the MACD strategy for quick trades starting at 5 seconds. This strategy is based on one of the most popular indicators, the MACD, or Moving Average Convergence Divergence. The MACD indicator shows the relationship between two moving averages of the asset price. It consists of two lines, the MACD line and the signal line, as well as a histogram that displays the difference between these lines. If the histogram is above the zero line and the peaks of the histogram bars are consistently rising, then there is an uptrend in the market. If the histogram is below the zero line, the trend is downward. How to set up the MACD indicator for quick trades from 5 seconds. Set the fast line to 5 periods, the slow line to 13 periods, and the signal line to 4 periods. Watch for MACD and signal line crossover signals. If the MACD crosses the signal line from bottom to top, it is a signal to open an up trade, while crossing from top to bottom can serve as a signal to open a down trade. Use the MACD in combination with other indicators and market analysis to get better signals. How to use the Stochastic Trading Strategy. Today, we'll show you how to use the Stochastic strategy for quick trades starting at 5 seconds. This strategy is based on the use of the Stochastic Oscillator indicator. The Stochastic Oscillator is an indicator that shows the current price position relative to its previous highs and lows. It consists of 2 periods, the fast %K and the slow %D, and helps to identify moments when an asset might be overbought or oversold. How to set up the Stochastic Oscillator indicator for quick trades starting at 5 seconds. For example, you can set periods like this, %K to 5, %D to 3, and the smoothing period to 3. Watch for stochastic line crossover signals. When the fast line crosses the slow line from bottom to top, it is a signal to open an up trade. If the crossover occurs from top to bottom, open a down trade. Use the stochastic indicator in combination with trend analysis for better results. How to use the Parabolic SAR trading strategy. Today we'll show you how to use the Parabolic SAR strategy for quick trades starting at 5 seconds. This strategy is based on the use of the Parabolic SAR indicator. Parabolic SAR, or stop and reverse, is an indicator that helps to determine the trend direction and moments for a possible trend reversal. The indicator is displayed on the chart as dots that are placed above or below the price. How to set up the Parabolic SAR indicator for quick trades starting at 5 seconds. For short-term trades, the acceleration parameter, also called step, is set to 0.02, and the maximum acceleration parameter, also called just maximum, is set to 0.2. When SAR dots cross the price from bottom to top, it is a signal to open a down trade. When SAR dots cross the price from top to bottom, it can be a good moment to open an up trade. Use Parabolic SAR in combination with other indicators such as MACD and ADX to improve the accuracy of the signals.
How to use the Bollinger Bands trading strategy. This strategy is based on the use of the Bollinger Bands indicator, developed by John Bollinger. It consists of 3 lines, a moving average, and 2 outer lines, which are adjusted according to market volatility. These lines expand when the market is volatile and contract during calmer periods, helping to evaluate market dynamics and potential price reversals. How to set up the Bollinger Bands indicator for quick trades, starting at 5 seconds. For short-term trades, use a period of 20 and a deviation of 2. When the price reaches the lower line and starts to rebound, you can open an up trade. When the price touches the upper line and starts to recede, open a down trade. Use Bollinger Bands with other indicators such as RSI or MACD for more reliable signals. How to use the ADX Trading Strategy. Today, we will show you how to use the ADX strategy for quick trades starting from 5 seconds. This strategy is based on the ADX indicator, or Average Directional Movement Index, developed by engineer and trader Wells Wilder. ADX helps determine the strength and direction of the trend, which is especially useful for quick trading. The indicator consists of 3 lines. The ADX line is a smoothed moving average of the difference between the other 2 components, plus DI and minus DI. The higher the ADX value, the stronger the trend. The plus DI line, or positive directional indicator, measures the upward movement of the price and helps to assess how much the price is moving upward. The minus DI linear, or negative directional indicator, measures the downward price movement and shows how much the price is moving downward. If the ADX value is above 25%, the trend is considered strong enough to open trades. How to set up the ADX indicator for quick trades. Set the DI length and ADX smoothing values to 5. Watch the direction of the plus DI and minus DI lines. If plus DI crosses minus DI from bottom to top, the trend is upward, and you can open an up trade. If plus DI crosses minus DI from top to bottom, the trend is downward, and you can open a down trade. To improve the accuracy of ADX signals, we recommend using it in combination with RSI, Stochastic Oscillator, and Bollinger Bands indicators.
How to use the Alligator Trading Strategy. Today we will tell you how to use the Alligator strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the Alligator indicator developed by Bill Williams. Oops, wrong picture. Alligator helps to identify trends and their direction using 3 smooth moving averages that visually resemble the jaws, teeth, and lips of an alligator. How to set up the Alligator indicator for quick trades. Set the following values. Jaws, blue line. 13 periods, shift by 8. Teeth, red line. 8 periods, shift by 5. Lips, green line. 5 periods, shift by 3. Follow the interaction of the lines. When the green line, lips, crosses the red, teeth, and blue, jaws, lines from bottom to top, open an up trade. When the green line, lips, crosses the red, teeth, and blue, jaws, lines from top to bottom, open a down trade. For best results, combine the Alligator indicator with other tools such as RSI or MACD to confirm the signals. How to use the ZigZag Trading Strategy. Today we'll show you how to use the ZigZag strategy for quick trades starting at 5 seconds. This strategy is based on using the ZigZag indicator. ZigZag is particularly useful for identifying short-term price movements in quick trading situations. This is one of the earliest indicators. It was used at the stock market. Its creator is not known. How to set up the ZigZag indicator for quick trades. Set the deviation to 2 to track minor but important movements. Set the depth parameter to 1 to make the indicator react faster to price changes. The backstep parameter should be equal to 1, which minimizes the redrawing of the indicator lines. Open an up trade when a new low point is formed and the line starts to move up. Open a down trade when a new upper point is formed and the line starts to move down. Use the ZigZag indicator together with volume indicators or oscillators such as RSI or MACD to confirm signals and increase the accuracy of your trades. How to use the OsMA trading strategy. Today, we will show you how to use the OsMA strategy for quick trades starting at 5 seconds. This strategy is based on using the OsMA, or Moving Average of Oscillator indicator. OsMA measures the momentum of price movements and helps to forecast future trends by showing the difference between the oscillator and its moving average. It was created based on data from another indicator, MACD. How to set up the OsMA indicator for quick trades. Set the fast EMA to 12, the slow EMA to 26, and the signal SMA to 9. These settings help to clearly identify short-term price fluctuations. Open an up trade when the histogram bar begins to form above the 0 line. Open a down trade when the histogram bar starts to form below the 0 line. Combine the OsMA indicator with RSI or stochastic indicators to help confirm momentum and direction. How to use the CCI Trading Strategy. Today, we will show you how to use the CCI strategy for quick trades, starting at 5 seconds. This strategy is based on the CCI Commodity Channel Index indicator created by Donald Lambert in 1980. CCI helps determine when an asset is overbought or oversold, which can indicate a potential price reversal. How to set up the CCI indicator for quick trades. Set the CCI period to 14 to make it more sensitive to short-term price movements. Watch for overbought and oversold signals. Open an up trade when the CCI falls below minus 100. This indicates an oversold condition and the price may start to rise. Open a down trade when the CCI rises above plus 100. This indicates an overbought condition and the price may start to fall. Combine CCI signals with other indicators such as RSI or MACD to improve accuracy. How to use the Momentum Trading Strategy. Today we will show you how to use the momentum strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the momentum indicator created by French mathematician Paul-Émile Appel. Momentum shows the strength and direction of the trend, as well as the further potential of its development. How to set up momentum indicator for quick trades. Set the period to 10 to make the indicator more sensitive to short-term price movements. Keep an eye on the indicator line relative to the 100 level. Open an up trade when the momentum line rises above the 100 level. This is a signal that the price is gaining speed and may continue to rise. Open a down trade when the momentum line falls below the 100 level. This is a signal that the price is losing speed and may begin to fall. Combine momentum signals with other indicators such as RSI or MACD to improve accuracy. How to use the Vortex Trading Strategy. Today we will show you how to use the Vortex strategy for quick trades starting at 5 seconds. This strategy is based on using the Vortex indicator developed by Etienne Bottega and Douglas Siegel in 2010. The indicator consists of 2 lines, positive vortex line and negative vortex line, which help to determine the beginning and end of the trend. How to set up the vortex indicator for quick trades. Set the period to 14 to make the indicator more sensitive to short-term price movements. Watch for crossovers of positive and negative vortex lines. Open an up trade when the positive vortex line crosses the negative vortex line from bottom to top. Open a down trade when the negative vortex line crosses the positive vortex line from top to bottom. These crossovers indicate the beginning of a new trend. Combine vortex signals with other indicators such as RSI or MACD to increase accuracy. How to use the envelopes trading strategy. Today we'll show you how to use the envelope strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the envelopes indicator, which was first used by Chester W. Keltner. The envelopes indicator consists of 2 SMA lines that frame the price chart. It helps to determine when the price of an asset becomes too high or too low compared to the average price. How to set up the envelopes indicator for quick trades. Set the period to 14 to make the indicator more sensitive to short-term price movements, and set the percentage deviation at 0.05%. Watch how the chart crosses the SMA lines. Open an up trade when the chart crosses the SMA from bottom to top. Open a down trade when the chart crosses the SMA from top to bottom. Combine envelope signals with other indicators such as RSI or MACD to improve accuracy. How to use the ROC Trading Strategy. Today, we'll show you how to use the rate of change, or ROC strategy, for quick trades starting at 5 seconds. This is a strategy based on the use of the ROC indicator, which was first proposed in the works of Dr. Alexander Elder. The ROC indicator measures the rate of change in the price of an asset over a certain period and shows the percentage change in price, helping to determine the strength of the trend. How to set up the ROC indicator for quick trades. Set the period to 7 to make the indicator more sensitive to short-term price movements. Watch how the ROC line crosses the zero line. Open an up trade when ROC rises above the zero line. Open a down trade when ROC falls below the zero line. These signals indicate the beginning of a new trend. Combine ROC signals with other indicators such as RSI or MACD to improve accuracy. How to use the Accelerator Oscillator Trading Strategy. Today, we will show you how to use the Accelerator Oscillator AO strategy for quick trades starting at 5 seconds. This strategy is based on the Accelerator Oscillator developed by the famous technical analyst Bill Williams. The AO helps identify changes in price momentum and potential trend reversals. It consists of a histogram with red and green bars that show acceleration, green bars, or deceleration, red bars, of the market movement. Setting up the Accelerator Oscillator for quick trades. Use the default settings: AO short period at 5, AO long period at 34, AC SMA period at 5. This will generate the AO histogram. Pay attention to the green and red bars on the histogram. Open an up trade when the histogram bar changes from red to green, indicating an increase in bullish momentum. Open a down trade when the histogram bar changes from green to red, indicating an increase in bearish momentum. Combine Accelerator Oscillator signals with other indicators such as RSI or MACD to improve accuracy. How to use the SuperTrend Trading Strategy. Today, we'll show you how to use the SuperTrend strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the SuperTrend indicator, which was developed by Olivier Sabin and helps to identify trends in the market. How to set up the SuperTrend indicator for quick trades. Set the ATR period to 10 and the multiplier to 3. Open an up trade when the price crosses the SuperTrend line from bottom to top. Open a down trade when the price crosses the SuperTrend line from top to bottom. Combine SuperTrend signals with other indicators such as moving average or ADX to improve accuracy. How to use the Fractal Trading Strategy. Today, we will show you how to use the Fractal strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the Fractal indicator, which was developed by Bill Williams and helps to identify potential trend reversals on the chart. It consists of 5 candles, or 2 periods. The middle candle is the highest or lowest, and on both sides of it are 2 candles with lower highs or higher lows. How to set up the Fractal indicator for quick trades. Set the period to 5. Now the fractal consists of 11 candles. Open an up trade on the second candle after the fractal if the first candle closed above the level of the middle fractal candle. Open a down trade on the second candle after the fractal if the first candle closed below the level of the middle fractal candle. In both cases, this is called confirmation of the fractal level breakdown. For increased signal accuracy, use the fractal indicator together with other indicators, such as moving average or RSI. How to use the awesome Oscillator trading strategy. Today we will show you how to use the awesome Oscillator strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the awesome Oscillator AO indicator, which was developed by Bill Williams and helps to identify changes in market dynamics and possible trend reversals. The indicator consists of a histogram showing the difference between the 34-period and 5-period simple moving averages, or SMA. How to set up the awesome oscillator for quick trades. Set the default parameters 5 and 34 periods. Open an up trade when the AO crosses the zero line from bottom to top. Open a down trade when AO crosses the zero line from top to bottom. Use the awesome oscillator indicator together with other indicators such as parabolic SAR or Bollinger bands to increase the accuracy of signals. How to use the Aroon trading strategy. Today, we will show you how to use the Aroon strategy for quick trades starting at 5 seconds. This is a strategy based on the Aroon indicator, which was developed by Tushar Chande in 1995. The indicator helps to identify the initial phases of a new trend in the market. The indicator consists of two lines, Aroon up and Aroon down, which help to determine the direction and strength of the trend. How to set up the Aroon indicator for quick trades. Set the period to 14 for a more sensitive response to market changes. Open an up trade when the Aroon up line crosses the Aroon down line from bottom to top. Open a down trade when the Aroon down line crosses the Aroon up line from bottom to top. To increase the accuracy of signals, use the Aroon indicator together with other indicators such as moving average or RSI. How to use the Keltner channel trading strategy. Today, we will show you how to use the Keltner channel strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the Keltner channel indicator, developed by Chester Keltner in the 1960s, which helps traders identify when an asset's price deviates from its average, which can signal a possible trend reversal. The indicator consists of 3 lines, a middle line based on the exponential moving average, EMA, and 2 outer lines that are created using the ATR, average true range, indicator, and a multiplier. How to set up the Keltner channel indicator for quick trades. Set the EMA period to 20, the ATR period to 10, and the multiplier to 2. Open an up trade when the price touches the lower channel line and starts moving upwards. Open a down trade when the price touches the upper channel line and starts moving downwards. For increased signal accuracy, you can combine the Keltner channel with other indicators like RSI or MACD. How to use the Bull's Power trading strategy. Today, we'll show you how to use the Bull's Power strategy for quick trades starting at 5 seconds. This strategy is based on the Bull's Power indicator, developed by Alexander Elder. The indicator helps traders gauge the strength of the bulls, i.e. buyers, in the market by measuring the difference between the maximum price and the exponential moving average, EMA. If the indicator value is positive, it indicates that the bulls are dominant. If it's negative, the bears are dominant. How to set up the Bull's Power indicator for quick trades. Set the EMA period to 13. This is the optimal setting for short-term trades. Open an up trade when the Bull's Power indicator crosses the zero line from below, confirming increasing bull strength. Open a down trade when the indicator crosses the zero line from above, indicating weakening bull strength. For greater accuracy, use Bull's Power in combination with other indicators such as RSI or moving average. How to use the Bear's Power trading strategy. Today, we'll show you how to use the Bear's Power strategy for quick trades starting at 5 seconds. This strategy is based on the Bears Power Indicator, developed by Alexander Elder. The indicator helps traders gauge the strength of the bears, that is sellers, in the market by measuring the difference between the minimum price and the exponential moving average, EMA. If the indicator value is positive, it indicates that the bears are dominant. If it's negative, the bulls are dominant. How to set up the Bears Power Indicator for quick trades. Set the EMA period to 13. This is the optimal setting for short-term trades. Open an up trade when the Bears Power Indicator crosses the zero line from below, confirming increasing bear strength. Open a down trade when the indicator crosses the zero line from above, indicating weakening bear strength. For greater accuracy, use Bears Power in combination with other indicators such as RSI or moving average. How to use the DeMarker trading strategy. Today, we will show you how to use the DeMarker strategy for quick trades starting at 5 seconds. This strategy is based on the DeMarker indicator, developed by trader Thomas DeMark. The DeMarker indicator helps identify whether an asset is overbought or oversold, allowing traders to spot potential pivot points in the market. DeMarker is based on the comparison of the maximum and minimum prices of the asset for a certain period. It ranges from 0 to 100, with the 30 and 70 levels serving as key decision-making zones. How to set up the DeMarker indicator for quick trades. Set the period to 14 for more accurate signals on shorter time intervals. Open an up trade when the DeMarker line crosses the 30 level from below. Open a down trade when the DeMarker line crosses the 70 level from above. For increased accuracy, combine DeMarker with other indicators like RSI or moving average. How to use the Fractal Chaos Bands trading strategy. Today, we'll show you how to use the Fractal Chaos Bands strategy for quick trades starting at 5 seconds. This strategy is based on the Fractal Chaos Bands indicator, created by the technical analyst Bill Williams. The indicator helps identify trend directions and potential market reversals using fractal theory. Fractal chaos bands consist of two lines that frame the price chart, indicating how chaotic or orderly the market movement is. If the market moves within these lines, it is trending. If the price breaks through one of the lines, it may signal the beginning of a new trend. How to set up the Fractal Chaos Bands indicator for quick trades. Set the period to 2 for increased sensitivity to market changes. Open an up trade when the price breaks above the upper chaos line and starts moving upward. Open a down trade when the price breaks below the lower chaos line and starts moving downward. To improve signal accuracy, use fractal chaos bands in combination with other indicators like MACD or RSI. How to use the Williams percent range trading strategy. Today, we'll show you how to use the Williams percent range strategy for quick trades starting at 5 seconds. This strategy is based on the Williams percent range indicator, developed by Larry Williams. The indicator helps traders identify overbought and oversold market conditions by showing when an asset's price is at extreme levels. Williams percent range measures the current price relative to its price range over a specific period. It oscillates between values from 0 to -100. Readings above -20 indicate overbought conditions, while readings below -80 indicate oversold conditions. How to set up the Williams percent range indicator for quick trades. Set the period to 14 for optimal short-term trading. Open a buy trade when the Williams percent range line crosses the -80 level from below, indicating an oversold market with potential for a rise. Open a sell trade when the Williams percent range line crosses the -20 level from above, signaling overbought conditions and a possible decline. For increased accuracy, combine Williams's percent range with other indicators like the moving average or RSI. How to use the Ichimoku Kinko Hyo Trading Strategy. Today, we will show you how to use the Ichimoku Kinko Hyo strategy for quick trades starting at 5 seconds. This strategy is based on the Ichimoku Kinko Hyo indicator, developed by Japanese analyst Goichi Hosoda. Ichimoku helps traders quickly identify trend direction, support and resistance levels, and potential reversal points. The indicator consists of multiple lines that provide a comprehensive view of market conditions. Tenkan-sen, short-term line, shows the average price over the last 9 periods. Kijun-sen, medium-term line, shows the average price over the last 26 periods. Senkou-span B, cloud boundaries, represents the cloud, indicating potential support and resistance areas. How to set up the Ichimoku Kinko Hyo indicator for quick trades. Set the default settings: 9 for Tenkan-sen, 26 for Kijun-sen, and 52 for Senkou-span. Open a buy trade when the price crosses the cloud from below. This indicates an upward trend. Open a sell trade when the price crosses the cloud from above. This signals a downward trend. To increase the accuracy of signals, use Ichimoku together with other indicators like RSI or moving average. How to use the Schaff trend cycle trading strategy. Today, we'll show you how to use the Schaff trend cycle STC indicator for quick trades. This simple and effective tool, created by Douglas Schaff, helps traders identify trend directions. The STC indicator combines 2 methods of analysis, MACD and the stochastic oscillator, to detect market pivot points more quickly. The first method, MACD, tracks price changes over time, helping you anticipate when the price may start to rise or fall. The second method, stochastic oscillator, measures how far the price has moved from its normal range, indicating when significant rises or drops might occur. How to set up the STC on pocket option for quick trades. To configure the STC for quick trades, use the following parameters in the settings. Fast EMA period, 23. Slow EMA period, 50. Stochastic cycle period, 10. The trend cycle is limited to values ranging from 0 to 100. The STC indicator uses 2 key levels, 25 and 75. Therefore, set the buy threshold at level 25 and the sell threshold at level 75. Open up trades when the market starts an upward movement and the indicator rises above 25. Open down trades when the trend changes to a downtrend and the STC falls below 75. This approach allows you to respond quickly to market shifts and make trades with minimal delay. Use the Schaff trend cycle for quick trades, starting with a 5-second time frame. How to use the Bollinger Bands width trading strategy. Today, we'll show you how to use the trading strategy based on the Bollinger Bands width indicator for quick trades starting at 5 seconds. This indicator was created by John Bollinger and is derived from his Bollinger Bands indicator. It measures the difference between the upper and lower Bollinger Bands, helping to assess market volatility, specifically how much the price of an asset fluctuates over a given time period. The wider the Bollinger Bands, the greater the volatility. The narrower they are, the lower the volatility. How to set up Bollinger Bands width on pocket option. Open the chart, select an asset, and find the Bollinger Bands indicator in the Technical Tools section. For short-term trades, use a period of 20 and a deviation of 2. When the BBW indicator reaches high values, it signals low volatility. This means that a sharp price movement may occur soon. At this moment, make up trades if an upward trend is expected, or down trades if the trend is likely to turn downward. When the BBW indicator reaches low values, it indicates high volatility and often signals the end of the current trend. In this case, place up or down trades depending on the market direction. For a more accurate analysis of current trends, use the Bollinger Bands width indicator alongside other indicators such as Bollinger Bands, RSI, ADX, and MACD. How to use the Donchian Channels Trading Strategy. Today, we will show you how to use the trading strategy based on the Donchian Channels indicator for quick trades starting at 5 seconds. The Donchian Channels indicator was created by Richard Donchian and helps traders determine the minimum and maximum prices of an asset over a specific period. It consists of 3 lines that show the upper, lower, and middle prices of the asset. How to set up Donchian channels on pocket option. Open the chart, select the asset, and find the Donchian Channels indicator in the Technical Tools section. Set the recommended period size to 20. Open buy trades when the price rises above the upper channel line and the asset breaks the maximum. Open sell trades when the price falls below the lower line and the asset breaks the minimum. The Donchian Channels indicator can also be used not only to determine minimum and maximum prices, but also to analyze volatility and future price movements, similar to how Bollinger Bands work. When the channel lines narrow, it may indicate that the market is anticipating significant movement. In this case, if the price breaks through this narrow channel, place buy or sell trades depending on whether there is a sharp move upward or downward. This strategy is excellent for short-term trades and allows you to react quickly to price movements. How to use the reversal trading strategy. Today, we will show you how to use the reversal trading strategy for quick trades. This strategy helps identify ideal entry points by recognizing that prices often bounce off key levels. How to set up the reversal strategy on pocket option. Open the chart and select the asset. Use drawing tools to mark key levels where the asset's price has struggled to move up or down in the past. Mark the level where the price has stopped multiple times and started rising. This is the support level showing the floor, where buyers become more active, preventing further decline of the price. Mark the areas where the price has reversed downward multiple times. This is the resistance level indicating the ceiling, where sellers step in to prevent the price from rising. When the price reaches a key level, support or resistance, and the candle touches it but doesn't close beyond it, this indicates that the price cannot break through. If the next candle moves in the opposite direction, this confirms the entry signal. Open a trade in the direction of the bounce if there is confirmation and the candle moves away from the level. Open buy trades if the price bounces off the support level. Open sell trades if the price bounces off the resistance level. For automatic identification of support and resistance levels, use the Bollinger Bands indicator. How to use the squat candlestick trading strategy. Today, we will explain how to use the squat candlestick trading strategy for quick trades starting at 5 seconds. If the body of a candlestick is significantly shorter than its wick, it's called a spinning top or squat candlestick. This type of candlestick signals market uncertainty regarding the current price movement, where both buyers and sellers attempted to change the price significantly, but the final result was minimal. It often appears near key price levels of support and resistance and indicates a possible trend reversal. How to set up this strategy. Open the chart on pocket option and select an asset. Use drawing tools to mark key levels of support and resistance, where the asset's price previously struggled to move up or down. Watch for the appearance of the squat candlestick. When the candle with a small body touches a support or resistance level but doesn't close beyond it, this signals that the price may change. After the squat candlestick forms, wait for the next candle to move in the opposite direction of the current trend. If the second candle confirms the reversal, open a trade in the direction of the new movement. Enter a buy trade if the candlestick confirms an upward reversal. Enter a sell trade if the candlestick confirms a downward reversal. How to use the Tweezer trading strategy. Today, we'll introduce the Tweezer strategy for quick trades starting at 5 seconds. The Tweezer is a candlestick combination or pattern that signals a potential trend reversal. It consists of 2 candles with opposite directions but identical extremes. In a downtrend, they share the same lows, and in an uptrend, they share the same highs. These extremes can be either the closing prices of the candles or their shadows. The candles in the combination can appear consecutively, or there may be one or more candles between them. What to do when you see a signal? Monitor the chart and wait for a candlestick with the same extremes to appear, preparing for a potential change in direction. Once the tweezer is formed, you can open a trade in the new direction. If the tweezer appears near support or resistance levels, it strengthens the signal. In this case, you can act immediately without waiting for the confirmation from the next candle. Use the tweezer strategy in combination with other indicators such as RSI, MACD, or moving average. These indicators help to confirm the signal from the pattern. How to use the 3-method strategy. Today, we will show you how to use the 3-method strategy for quick trades starting at 5 seconds. 3 methods is a candlestick pattern that signals a trend continuation after a small pause. It consists of at least 3 small candles appearing on the chart after a long candle, following in the same direction. The key is that these small candles should stay within the range of the previous long candle. How to use the 3-method strategy for quick trades. Pay attention to a strong candle that goes in the direction of the trend. If it is followed by several small candles, get ready to open a trade. Wait for the formation of a large candle that moves again in the trend's direction. Once this candle closes, you can open a trade in the same direction to catch the continued movement. Use the 3-method strategy along with indicators such as RSI, MACD, or moving average. These indicators will help confirm the signal provided by the pattern. How to use the breakout strategy. Today, we'll show you how to use the breakout strategy for quick trades starting at 5 seconds. The breakout strategy is based on the idea that the price of an asset breaks through a significant support or resistance level. A breakout is typically followed by a sharp price movement in a new direction, and the trader's challenge is to enter the market at the right time. How to use the breakout strategy. First, identify the support or resistance level. When the price breaks through these levels and the breakout is confirmed by the next candlestick moving in the same direction, this signals the start of a new trend. Open a buy trade if the price breaks the resistance level and starts moving upwards. Open a sell trade if the price breaks the support level and moves downward. Use the breakout strategy together with RSI or moving average indicators. These signals help confirm that the breakout has actually occurred. How to use the candlestick engulfing strategy. Today, we'll explain how to use the candlestick engulfing strategy for quick trades starting at 5 seconds. This strategy is based on a candlestick pattern that signals a potential trend reversal. The pattern occurs when a new candlestick has a larger body than the previous one and moves in the opposite direction. This new candlestick is called engulfing candlestick, indicating that the trend may be about to change. The larger the engulfing candlestick, the stronger the potential movement. How to use the candlestick engulfing strategy. First, identify a candlestick that is larger than the previous one and moves in the opposite direction. Wait for the formation of a new candlestick to confirm the signal. If the candlestick is moving upward and engulfs the previous one, it's a bullish signal. Open a buy trade after the closing of the confirming candlestick. If the candlestick is moving downward and engulfs the previous one, it's a bearish signal. Open a sell trade after the next candlestick confirms the move. Use the candlestick engulfing strategy along with RSI, MACD, or moving average indicators. You can learn more about using RSI, MACD, and moving average indicators in these videos. Try now. Follow the link in the description.